Good evening, everyone. Welcome back to Swan Signal Live. Got another primetime edition here for you with our boys, Preston Pysh and Andy Edstrom. Before we dive in, we're going to take a quick look at Swan. What's going on? Swan Squad out there, thank you everyone who is stacking with Swan. You know who you are. We appreciate each and every one of you. If you are not stacking with Swan yet, get over to swanbitcoin.com/Preston and support Preston Pysh. He'll stack some sats every time you buy. You'll get a little bit, but every little bit every little bit counts. So it's the best way to accumulate Bitcoin. Automatic recurring buys, instant buys. We'll handle wires for buys up to $10 million. We're supporting lots of corporations now, and entities are stacking with Swan on their balance sheets at Swan Private, at swanbitcoin.com/private. Super exciting times. Numbers going way up all over the Bitcoin world, including at Swan. Bitcoin is a long-term investment. So if you started buying $50 every week 3 years ago, you would have turned $7,850 into, we'll just make a quick guess. What's the number in your mind? It's $53,331. All right, that's the number going way up for you. This thing's a long-term investment. Think 3, 4, 5 year term at minimum. We're thinking decades. Once you really get down the rabbit hole, you're thinking decades. This thing is going to build a bright orange future for us. A really bright future. The money is the base layer of our civilization. It's broken. It's broken. And Bitcoin is here to fix that foundation and help us build a brighter future. And you can get in early on this thing. Yes, it is still early. It may sound like a lot of money at $59,194, but it's not. This is early. This thing is going to be, I think, the global reserve currency, the main money that we use around the world, at least on the internet, which is basically running most of commerce now. So, get in. It's like buying a piece of the internet in 1992. It's a massive upside potential, and you'll be doing yourself and the world some good. Let's just dive into this one right now. I am feeling bullish tonight. I can't wait to talk to these guys. This is the Bitcoin quarterly report for Q1 2021. Preston Pysh is here with us from the Investors Podcast Network, and Andy Edstrom, author of Why Buy Bitcoin. Gentlemen, what a quarter for Bitcoin.
You gotta love it.
Incredible. Andy, you're muted, buddy. Incredible quarter. We're gonna get those thoughts from you as soon as are you back on?
I'm back. Sorry about that.
Go.
There's no chance. There's no chance in hell we're going to cover everything that happened this quarter because, as is said, there are quarters in which decades happen or something to that effect. But we'll do our best.
Yeah, this is one of those. And so I feel like we're going to go through, 30, 40 decades, 3 or 4 decades this year. So let's kick it off. All right, guys, I'm going to ask you, out of everything that happened this quarter, and it was just bullish news after bullish news, big things happening every week, almost on a daily basis, it seemed at some points. What were the biggest, most bullish news of this quarter for Bitcoin? And we can also dive into some macro as well. There's a lot to cover on that front, but we'll stick to Bitcoin here for just a minute. Preston, what comes to mind when I ask you what the biggest thing that happened to Bitcoin this quarter?
From like a headline standpoint, I would say the Tesla news, the 1.5 billion Tesla. I don't necessarily think it was the size of the purchase, but it was who was doing the purchase and just the headline grab for sure was just kind of piqued everybody's interest. Like, what the hell is Elon Musk, who's supposedly energy efficient and all those types of things, buying Bitcoin? It doesn't make any sense. And I think it forced a lot of people to really kind of reassess their thoughts on some of that kind of stuff.
Yeah, absolutely. Andy, what do you think about the Tesla news?
Yeah, it's huge. He has, probably the biggest microphone in corporate America, right? More people follow Elon Musk than just about anybody else, especially in tech. More smart investors. His stock, despite having corrected a little bit recently, has just been, the best performing large cap equity that I've ever seen in terms of the, amount of return that's accrued to his investors, over a period of just recent years. And so yeah, it's huge. And the other thing I would add, which is sort of a cheat, which is the NGU technology. And my favorite graph to look at in terms of the history is the monthly, and I'm looking at 6 green candles in a row. And I don't know if that's happened in recent history. I can't think of a period in which it has. I'm not sure it even happened in the same time frame 4 years ago in the last bull market. It has just been a relentless move higher, and there's lots of underlying reasons for that. But yeah, NGU for me and you.
The Tesla stuff, was definitely big. I mean, Elon is, a global. He's a visionary. He's a leader of our time, and is going to be a massive player in the the history books for a long time to come. He'll probably have a planet named after him or something. Might rename Mars Musk, but. It's a big deal. And I think the most bullish part about that news to me was that, he obviously they're going to hodl that stuff, but that Bitcoin that they bought, the 1.5 billion, and I think it's 48,000 Bitcoin that they got, which is not a bad stack, but they're also going to accept Bitcoin for Teslas for purchasing, and they're going to hodl that. And then they also revealed that they're using BTC Pay Server, open source software, which is fantastic, supporting that project, and even came out and made a responsible disclosure about a bug they found while they were running the software. So cool. I mean, this is the cypherpunk like dream of a corporation. So just like adds on to the cool factor of Tesla, which is already like through the roof. So big news there for sure.
Brady, I would have told you. So when we talked last quarter, I would have told you, I obviously thought that a big tech company was going to put it on their balance sheet. But I would have told you that I think Tesla would probably been the last company to do it.
Interesting.
And the reason why is because it's not like they're just swimming in free cash flows over there. Like for me, some of the other companies were much more obvious picks, rewinding 3 months ago than Tesla. So to be honest with you, when it came out that it was them, I was very surprised. And I think it was just kind of like this moment, especially if you're out in Silicon Valley or you are one of these big tech companies that are sitting on hundreds of billions in marketable securities that you could easily allocate to this. You would look at you're looking over there and saying, why are they doing this? First of all, they don't have cash flows. This is a really risky move, is how it would be perceived, because they don't have a lot of float on their balance sheet to play around with and doing things like this. And I think it only made the gears turn that much harder for all the other companies in Silicon Valley to try to understand, why is Musk doing this? Why is his team of people that are obviously extremely smart in business doing this position? And I think that it's only further making people dig in harder and try to understand what's this Michael Saylor saying. Like, let me really dive into some of this stuff and understand why they're doing it.
Yeah, absolutely. I mean, here's just one reason why they're doing it. Tesla's 1.5 billion is now at 2.5 billion.
Yeah.
MicroStrategy's 2.2 billion, 5.4 billion now. These are massive gains. This is an interesting question though. Will these companies continue to hold this stuff if, Bitcoin takes another 50, 60, 70, 80% dip? First of all, we can talk about what we think the chances are of that. And I'd love to get into that discussion, but do you think these corporations are going to hold this stuff? And then let's look at other entities as well, like hedge funds and big like insurance companies like Mass Mutual, for instance. They probably have some like bylaws or whatever rules about balancing investments and rebalancing things. So at some point, when Bitcoin becomes too big of a part of their balance sheet, they might have to sell some to bring it back down and re-diversify. So what are you guys' thoughts on that?
So Andy, I don't know if this is true or not, but I suspect it's true. I suspect that Tesla has made more profits. Now I know they're not realized profits, but they have these unrealized profits on their balance sheet. And I suspect that they're significantly higher than any amount of profits that they've actually made from selling cars in 2 months. Correct?
Yeah. That's what I've heard.
I think that's right.
So
I think the math is on your side on that one, Preston.
Yeah, probably by a lot.
Yeah, it's the question, it's a really interesting question, is sort of who are the really true diamond-handed hodlers among the corporates here, right? I kind of believe Saylor is. I think with the rest of the crew, it's going to be a little bit of a mixed bag. I mean, I think, a lot of us would love to think that once a corporate investor like that is bought in, like they're just going to hodl forever. I think some will. I think some will not. And then I think there'll be varying degrees in between. And so it kind of depends on the path. It kind of depends on price. I can definitely construct a scenario where some of the more weaker-handed, corporate entities, or frankly institutions like the hedge funds, right? Take the hedge funds, right? Because Brady, you mentioned specifically hedge funds. You mentioned pensions. I mean, hedge funds are, they're mercenary traders. Basically they have no allegiance to any particular asset.
Right.
Some may have some allegiance personally. Like, it wouldn't shock me if some of the smarter macro hedge fund guys are basically hodling harder themselves. But as far as their funds, if they make a 5x, they make a 10x on, a certain percentage of their overall portfolio, that's how they get paid, right? They get paid their performance fee. They get paid their carried interest, their 20% of profits at year end. And, if Bitcoin goes, I don't know, pick a number, 5x from here, you can bet that some of those guys are going to be trimming their positions. So I think it's a mixed bag. I'd love to see everyone hodl real tight for the duration. But we're gonna find out.
I mean, the great thing with Michael, and I think this is what confuses so many Wall Streeters that are managing other people's money, they forget that the money that he's investing, he doesn't really care about the volatility that much. It's sitting on his balance sheet. He has other assets that are generating free cash flows, and then he just continues to take those free cash flows and plow it into something that's not a melting ice cube. So when you're not managing other people's money, you can make those bold decisions because you're not managing your investors like you're managing the money, which is pretty much a 50-50 split of their time and what they're thinking about as they're managing their funds.
I think it's worth also remembering, there's different scenarios you can play out and there's different approaches. Everybody loves rolling the dice with the house's money, right? This is what I think it was Ruffer did, right? They took a position, they saw a multiple, and then they took their cost basis off the table, and now they're letting the rest of it ride. I say quote unquote ride. Do they really understand this thing? Are they long-term, multi-year, multi-decade holders? I don't know. It's certainly an easier position to take. I can speak from experience, right? If you're advising someone on how to basically make an asset allocation, maybe they're not fully bought in, maybe they're not betting the majority of their assets on it, but they're making a bet and then they get a multiple and then they take their cost off the table, then it's kind of a free ride from there. I know there's a certain percentage of investors out there that are thinking that way, either because, they're succumbing to that sort of psychological framework. And frankly, it's a fallacy, but it's definitely an easier conversation with someone whose money you're managing on their behalf to say, look, we already made back our cost. The rest is upside. So, if it fails, God forbid, then, we still didn't lose any money.
That's a really good point. I mean, that's how I roll in Vegas. You go up, you take that stake off the table. It's just, free money the rest of the week. And that's a good feeling. If you can score that big win, it's a bull market. So this is a perfect time to do that. You buy some Bitcoin, let it go up, take that stake off the table and just let it ride. That's a great way to put it. And I mean, it seems to me that people are starting to get that this is like the base case of Bitcoin. The fundamental reason to buy Bitcoin is to hold it for the long term. We have educators like Michael Saylor on board now, who's and this is another thing that happened this quarter that was fantastic, was the big MicroStrategy conference, right? The virtual conference for, I think it was something over 1,000 corporations represented there. So we've got guys like Michael Saylor and now Elon Musk too, representing corporate America. and teaching them that this is something that you know, that you're going to buy to hold for the long term. Do you think that, you know, if that's the case, we might be seeing these coins that are coming off exchanges, kind of being held in deep cold storage with the intention of holding on to them for a long time? What are some of the other reasons? And I know, Preston, you and I were talking about this on Twitter. Some of the other reasons why we might see why we're seeing this just like, you know, historic drop of coins off of exchanges this bull run.
I don't know, but
Right.
if I was going,
don't know for sure.
If I was going to guess, I think that a lot of it has to do with the derivatives market. I think it has to do with people, you know, some of these entities that we're talking about as far as corporations go, they're going to take possession of it. They're not going to trust it to sit on some exchange because they're going to have done the homework. So I think that that's another big piece of it. But when you look at how the physically settled derivatives work, you lock up coins in escrow. Now, I've reached out to Glassnode and some others and have asked, hey, is this being calculated as being pulled off the exchange? Is it part of those numbers? And they didn't really have a good answer for me. So until we know that that's not the case, I kind of suspect that that's probably some of it. So when you look at the size of the derivatives market, you look at how they're 100% escrow for writing these contracts, or if you're in the lending borrowing market, how it's over collateralized, that goes into escrow. I think all those things are playing an enormous factor of coins coming off exchange because they're demanding physical settlement in order to write contracts and to do these types of financial gymnastics.
Andy, do you think, I mean, if you had to hazard a guess, just based on, you know, being in the industry, what do you think? Like, what percentage of these coins? I mean, there's hundreds of thousands of coins that have come off exchanges in the past 6 months, particularly in the past 3 months. Never seen anything like this in the history of Bitcoin. Do you think that some of that is just cold storage stuff? Do you think this is really like all futures derivatives contracts and BlockFi and those kinds of companies that are, you know, stacking all of these coins into their services?
Yeah, I mean, I have to assume that it's the institutional demand, obviously, by and large. I would love to dig into the Glassnode, you know, data. I sort of assume it's accurate, and yet, you know, I think people are taking it at face value. I suspect that, you know, as with Chainalysis, there's sort of varying degrees of certainty about, you know, which addresses really are cold storage, which aren't. You know, there's some that probably very clearly are. There's some that you're not really sure. And so you hope that in aggregate, the data are accurate. I'd love to dig farther into that. I'll tell you one thing I like about it a lot is it tells me there's not retail FOMO yet, right? Like we are nowhere near, you know, the sort of blow off stage where everyone and their mom and, you know, all your family members and are all piling in. I think we'll probably get there, but you know, I just don't see that we're anywhere near that yet, and that tells me that there's plenty of scope for this bull market to go a lot farther and a lot higher.
Yeah, no doubt about that. I'm excited to see that trend either way. Even, you know, even if they're going into other custodial services, it's interesting to see the Bitcoin industry growing and maturing in that, you know, sense, financially speaking. And you know, we'll still continue to educate that you know, you don't need to seek premium on an asset that goes up 200% a year on average. Just hold it and educate yourself and learn. So one of your and people you look up to, Preston, Ray Dalio, and you've you know, spoken a lot about him, and I know that you kind of quote him and refer to him a lot in your podcasts. He's kind of, you know, dived into Bitcoin this year. He's called it one hell of an invention. He also recently said that he thinks that the US government outlawing Bitcoin is a high probability, a good probability, I think is exactly what he said. So you've been watching Ray, I'm sure. What do you think about his kind of foray into Bitcoin this past quarter?
So instead of attacking Ray, I'll just attack the idea. So his idea that it's going to be banned. When you pull on the thread of that narrative, I have a really hard time looking at how that stands up to all the different counter arguments that are out there. In fact, I would make the argument that you're seeing the exact opposite of that playing out, at least here in the United States. You're seeing laws that are actually accommodative, especially at the state level. You're seeing Texas actually start to compete with Wyoming. You have senators that are tweeting at other representatives in other states, basically saying, "Hey, you're playing catch up with us." So whenever I look at what's happening, when I look at all the big banks, I look at Goldman Sachs, I look at Fidelity, you name it, bank is involved. When I look at the insurance companies that are now getting involved, the size of them, you look at the laws that are being passed that blockchain technology can be used as a clearing mechanism for payment processing. You see Visa using USDC and other things as clear. Like, give me a break, right? Like, who's out there saying, well, I guess we know who's out there saying, I just don't buy the argument, because everything that I'm looking at is suggesting the exact opposite thing playing out. So, does he have connections? Of course. Does he have people that are surrounding him that think out of the old system? You bet he does. Do I think that that's his Achilles heel as he's making these kind of statements? I sure do. But I'm just one that looks around and says, okay, well, that's an opinion. What's the basis for it? And then what's really happening in the economy? And I think all of that aside, I think the real narrative to focus on and the thing to think about is, if you ban it, if you try to do things to prevent it from spreading, the only entity that you are blocking is yourself from having access to this thing that's taking over on a global level. So although the thing that he's using to say that, he's comparing it to an analogous period back in the 1933 period of time when gold was banned, right? I got it. I understand the history of that. I understand why people might think that could happen again at a surface level understanding of everything that's playing out right now. But I think the thing that makes now so different than that period that they're comparing it to is you didn't have a global feeding frenzy of every fiat currency on the entire planet getting debased at a breakneck pace, double-digit debasement on an annualized basis in a competitive way between nation states. That was not happening in the 1930s, and it's happening right now. So if people want to turn their eye to that and just say, hey, I did a bunch of studying from 80 years ago or 100 years ago, and I've read the book This Time is Different, and it showcases 100 examples throughout time of how gold was banned, you can do that. But if you don't start asking more questions and start digging a whole lot deeper than the simple narrative of spewing something from history, you might miss it. And that's my opinion.
Well said.
Yeah,
man. Well said.
just to piggyback on that too, I agree with everything that you said, Preston. The number that I always hew to when people ask me about, what's the probability of prohibition or de facto prohibition in the next, 5 years, 10 years, I always say less than 10%. And part of it also is the path dependency, right? I return to the fact that, well, let's say my opinion that we're in this beautiful magical period in which Bitcoin is already too strong to kill, but it's still too small to matter. And, we can argue about, okay, what is the level or what is the size at which, governments start to care? I mean, sure, we've heard some, offhanded, mostly dumb comments from central bankers, whether in the US or Europe or elsewhere, saying things about how, Bitcoin is, or crypto, used for crime primarily, which is demonstrably false. And, so they're talking about it, they're jawboning it a little bit, but really it's too small to matter. And I guess it's too volatile to matter, right? You keep hearing Jay Powell say, oh, it's too volatile to be money. Okay, fine. I agree. Leave us alone. We'll be over here in the corner, continuing to build Bitcoin. And so, I just,
Andy, Andy, I hate to interrupt you, but I want to comment on what you just said. What would happen if the exact opposite? Let's say Jay Powell comes out and says, hey, this Bitcoin thing is really making a lot of sense. Or let's say Janet Yellen comes out and she's saying the exact opposite. She's saying there's a lot of promise in this. They can't say that. It's impossible. That's an impossible statement for them to make when the entire planet is the capitalization of every asset on the entire planet is hanging by the three words that they say, whether it's more or a lot, will change the price of everything on the planet by tens of trillions of dollars. The forward guidance of just a couple words will recapitalize everything to levels that if an alien would come from another planet and watch what was happening, they would be like, this is madness. These people, how are these people intelligent life forms?
How did we discover this civilization, at this level of technological advancement, and yet they still haven't adopted hard money?
Yet there's millions of them in New York City, millions of them in London, and these people will tell you that 1.5% is the risk-free rate. They'll tell it to you with a straight face. They'll say, "Oh yeah, inflation. We barely have any inflation, right?" It's madness. It's madness.
I mean, how do we know that?
I'm just like,
no,
man. I'm just done.
Keep dropping those bombs for us, Preston.
This is just nuts.
Preston's just ready for hyper Bitcoinization. We're just tired of waiting at this point. Just have to just do it already.
Take the stupidity. I cannot take the stupidity anymore. I'm sorry, I just can't.
I mean, yeah, they're that's why they call the late adopters the laggards, right? It'll hit them. It'll hit them one way or the other. They're gonna get on board, and I do feel like it's happening faster than any of us thought it was going to. So yeah, the CT announcement. So Aker is a big Norwegian company, the Aker family. Launched a new company called Bitcoin, a new Bitcoin initiative called SEETEE, SEETEE. This is probably the most bullish piece of writing that I read this year or this quarter. So if you haven't read the SEETEE shareholder letter that announced the launch of their company, it's incredible. They get it, like 100% get it. These are Bitcoiners through and through. They are, right up there with Michael Saylor in having achieved a deep understanding of this thing relatively quickly, I assume. In that letter, a section header was not investing is the riskiest decision, right? There's no risk-free rate. Any amount of dollars you're holding is risky, right? Any amount of dollars you're holding that's not in Bitcoin, or if you're not in Bitcoin at all, incredibly risky at this point in time, right? And yeah, you guys probably have some thoughts about CT. They're kind of starting to make their moves right now. They made their first purchase, 1.7 thousand Bitcoin. They probably have more at this point. They're going to get into mining. They're going to look at investing in Bitcoin companies and supporting Bitcoin projects. What do you guys think about this move and how important it is for the space?
Yeah, I like to quote, as soon as I saw this publication, this letter, I saved it down immediately to my Bitcoin readings and Bitcoin research file, and I just popped it up here as you were talking, Brady. Mm-hmm. After 40 years in business, I have learned that you always have to keep an eye out for new opportunities and developments on the horizon. This is quoting from the letter. CT marks that horizon. It positions itself in the middle of an industry that could define the next several decades, much like the internet has done since the early 1990s. These guys get it. It helps that basically that the owner of the firm or the primary shareholder is pretty heavily into the energy industry. Is in multiple industries and businesses. Is a billionaire, I believe, or maybe multi-billionaire. Understanding the merger between energy and Bitcoin mining, I think is crucial to understanding the future of this phenomenon. And we could spend quite a while talking about what Bitcoin means for the future of energy. I happen to think that it'll be the best thing that happens to clean energy, in modern history. I think it'll accelerate down the cost curve, accelerate the decrease in the cost of production of clean energy in a way that nothing else has, that no government policy has been able to do, that no rich, well-intentioned philanthropist has been able to do. I think that this Bitcoin network will be the catalyst that brings clean green energy to the masses in a way this decade that nobody, well, at least I never possibly could have imagined. And so, yeah, it's huge.
It's giant. Preston, you want to weigh in?
I don't have too much more to add than what Andy said. I completely agree with everything he's saying. I think that you're going to get to a point where the energy companies and the mining companies are going to be kind of circling themselves as to who's going to devour who. Right.
Yeah, I mean, this is a big leg up. Here's what they said about mining, which I think is just an incredible quote here. So this is they're a big oil family, right? And I'll just make a quick side note. The pension fund that their family started with their company, which has grown beyond just their company, but they have invested over $1 trillion in Bitcoin. This Norwegian oil pension fund, which is like the oldest pension fund in the country.
Wait, what was that number?
$1 trillion in
what?
Bitcoin. $1 trillion. Yeah, not in Bitcoin, not in BTC. $1 trillion into Bitcoin. So yeah, it's they said the Bitcoin mining is good for the environment. Essentially, they wrote they're going to transfer stranded or intermittent electricity without stable demand locally, wind, solar, hydropower, to economic assets that can be used anywhere. Bitcoin is, in our eyes, a load balancing economic battery, and batteries are essential to the energy transition required to reach the targets of the Paris Agreement. That is massive. An oil company to come out and say that, and what a deep understanding. This is what Andy was getting at. This is an energy battery. This is, you can go out to in the middle of nowhere where there are energy sources that are nowhere close to civilization. The, cost to transport them is, makes them unusable essentially until Bitcoin. You can move, a container out there full of Bitcoin miners and turn that stranded energy into money. And store it. Essentially, you're storing energy on the Bitcoin network that can then be transferred to be used in civilization, in populated areas, right? Because people can use that Bitcoin to buy electricity closer to them or whatever else they want. So this is a fascinating way to look at Bitcoin, and to have an oil tycoon writing a letter like this and just saying, look, hey, this is the thing. This is the thing that gets us to whatever the goals that you want to accomplish are in the Paris Agreement, or whatever other, CO2 reduction goals you might have. Massive. So quickly, before we kind of move on to, I want to talk a little bit more about macro stuff and kind of dive in a little bit deeper on that front from quarter one. But what do you guys think about these companies that are managing a bunch of money, like BlackRock, Morgan Stanley, are going to make, others as well? I think JP Morgan and Goldman Sachs all, announced that they're going to make Bitcoin available to investors in some capacity. How do you think this is going to affect the landscape beyond just number go up? How do you think this will this change Bitcoin at all, or will Bitcoin be changing these companies?
I think the best part was Goldman Sachs. What was it, Andy? 9 months ago, it came out with their report when Bitcoin was at $6,000 or $7,000 about how it was a speculative thing that you don't need to have in your portfolio. Literally like 6 or 7 months ago, or 8 months, or whatever it was. I don't remember. Irregardless, it was a meaningless report that we all laughed at and made fun of. And now here they are, arriving at the last second. They're going to swoop in and save all their high net worth investors.
Yeah, it's great. I got to go back again to my archive, because I know I saved that one. I'm sure I saved that dumb Goldman Bitcoin PowerPoint where they were spewing the usual FUD, and that was basically a bottom signal in terms of price. We've 6 or 7x since then, I think, and it wasn't that long ago. Yeah, I mean, for me, it's been as a wealth manager, a little bit yelling into the wilderness for the last few years. And, I always thought they were going to come around eventually. These guys, these institutions, basically the Wall Street establishment, right? The big Wall Street wirehouses, the major banks, the institutions that captured their regulators, did their very best to both enrich their employees and torpedo the world economy not so very long ago in the global financial crisis, and got away with it. And it seems like this time it's real. It seems like they've finally come around. It's hard to ignore $1 trillion asset, right? Let's be honest. There's nothing Wall Street understands better than finding ways to make money in asset classes, and it's getting just too difficult to ignore this thing. So they're finally coming around. Brady, will basically they capture Bitcoin, or will they change Bitcoin somehow? I really don't think so. When you look at the HODL waves, and you look at the waves of coins and when they were mined or accumulated or acquired, and who has them, the institutional money still doesn't really account for that much, right? I mean, the network is so large and so robust, and the earlier waves of retail as well as miners, obviously, and I mean, if you go back far enough, you're talking, Satoshi and crew, that I really don't think that Wall Street can capture this thing. I mean, there's a lot of discussion about it. There's sort of, it's basically a FUD category for me. It's like, is Wall Street going to destroy Bitcoin? And the answer is, I really don't think so. Not too worried.
Their bigger problem is going to be, how in the world do they explain to these people that they put them into fixed income in 5 years from now? How are they going to manage that? Boy, you talk about needing like some serious performance skills, because they're going to need them. They're going to need some, like, that is going to be some of the best acting that has ever been performed on the face of the planet.
Well, I have great news for you, Preston. The sales forces of the big banks are among the best actors and sellers you've ever laid eyes on. So
they're going to have to up their game, though.
That's true. It may be a bridge too far. It may be, you may require, basically an Academy Award winning performance to be able to hold on to your clients. Basically as the returns go, the real returns go more and more negative on whatever percent of global assets are, and it's significant. That's in these wasting away bonds.
I mean, I know we've talked about it on the show, but I mean, it's so insane. Michael Saylor's going out there and saying, "Hey, I want to raise, $800 million at a 0% coupon. It's convertible, right? But at 0%, I'm going to pay you nothing. You deserve nothing, and you're gonna enjoy it. I want you to sit down, enjoy this. You're gonna get nothing,
and you'll be happy.
And you're gonna be happy. And I'm gonna be oversubscribed by $200 million, and you're gonna be happy."
And you're going to be happy.
And don't say a word. Just sit there.
Desperate.
And don't say a word.
Desperate for exposure to Bitcoin.
Well, meanwhile, in the background, the powers that be and our leaders, our elected leaders, and their infinite wisdom are hatching new multi-trillion-dollar stimulus plans, as all signs indicate that we're already going to have a rip-roaring recovery. Right? The signs are everywhere. Stock market, is on fire. Real estate market,
in nominal terms.
In nominal terms, yes. Home prices, right? Home prices rising faster, than they have, I think, ever, but certainly in
11% last year, I think.
Yeah, commodity prices, right? Commodity prices ripping, and I'm not talking about monetary metals. I'm talking about industrial commodities. It's all signs point to a recovery, and still the government prints more money and runs multi-trillion-dollar deficits. You scratch your head and wonder. And if you've been in Bitcoin for a while, you think you're losing your mind. Thank God we have each other, right? Thank God we have each other to to just gut check to make sure that that we're not all crazy.
If you would have told me last year that the Teletubbies would be tweeting about Bitcoin, I would have believed you.
I would have called it a top signal, but yeah, I would have believed you too. It's like Katy Perry's crypto clause in 2017. What's funny is we're getting all these crazy little, bullish things that are, would have been considered top signals before, but it's just because Bitcoin is so much more established than it was then. Like, getting on being on CNBC and being mentioned, or having, pomp on CNBC in 2017 was a big deal. Every morning, CNBC has basically a segment on Bitcoin these days, right? It's just everywhere. Everyone knows about it. So it's been incredible to watch. If you look at Q1 2017 versus Q1 2021 at the beginning of each bull run, night and day difference. I mean, night and day. It was nowhere on the mainstream media or kind of mass consciousness in early 2017 at all. It's crazy. So let's talk a little bit more about this stimulus package, right? I think I haven't looked into it at all, but I think I saw a tweet. It was like $2.5 trillion stimulus package being proposed by President Biden. So do you guys know anything more about it than just the number that you can kind of give us a little rundown?
So I think it's important to specify whether you're talking about the March or the April stimulus package.
Right. Okay.
I know which one you're talking about.
That was 1.9, right?
But I think it's important for people. I think, honestly, people, like, we're obviously following this very closely. Your typical person might think that the one that you're talking about is the one from last month.
Yep.
Right. That's what your typical person is, just like, oh yeah, that's stimulus. Yeah. I got a check or something like that at Christmas, I think. Like, It's all mixing together.
Mm-hmm.
Like, the fact that you've had 3 stimulus deals since December, right, is not cause for alarm at all. Like, give me a break, man. Once you turn it, and we've been saying this for over a year, once you turn this thing on, good luck turning it off. Ever. Right? This thing is not getting turned off. It's just getting started. And I think we've talked about it on this show. If you start doing UBI and you start stuffing, just straight printing cash, stuffing it into people's pockets, and if you don't think that that's going to make the price of some of the things on the CPI gauge start to go up, I think you're kidding yourself. I think that's why the bond market's wigging out right now and it's selling off like crazy, is because people know that this stimulus isn't ending, and that it's going to show up in the price of all the things that you go to Home Depot and buy, and the things that you go to the grocery store and buy, because people need those necessities and they're barely getting by week to week. And so they're going to bid the prices of those things. Well, it starts showing up in the CPI gauge. Not a lot, but a little bit. Look at the price of oil, all these things that are coming back online. Like, when that happens and bonds start selling off and the yields are going higher, guess what they got to do? They got to print even more money in order to push those yields back down. Okay. Because that's how you do it. You print a bunch of money and you stuff it into the hands of people that own fixed income, which is your 10 percentile of the population. You got to buy it off of them and stuff that liquidity into the system. And so now you're double printing. You're not only printing the UBI, but then you're also printing more QE. And it's this never ending loop of printing. Not only do you have that at the domestic level, but now, because the dollar, or whatever country we're talking about that's doing this, has their currency going down in value, and they're sucking like a vacuum, labor and material costs go down, which brings the incentive to buy foreign labor and materials up. Okay. And every other fiat currency now has to do the same in kind if they don't want their currency to shoot to the moon and all the prices of their goods and services go way up and they're not competitive anymore. So this is the competitive dynamic that is a perpetual machine at this point. And if you think they can stop it, you're totally kidding yourself.
Mic drop.
Damn.
Mic drop
Mic drop.
from
No.
Preston Pysh. I want to add my 2 cents because Preston's spot on that, it's just wave after wave after stimulus. And once you're on the junk, right, we're, we started back in 1971. I don't know. I guess the 80s were a good decade for Coke, right? But then that wasn't enough. So then we moved on to the heroin, and now we're on the fentanyl. And once you're on the fentanyl, if it doesn't literally kill you, you can't go back, right? You can't get off the junk. The one thing I'll say about this latest stimulus is it's allegedly, and we don't really know, but allegedly it's for infrastructure spending, right? Building stuff. Now, in fairness, infrastructure in this country has gotten sort of decrepit. I'm talking about in the US. But the other thing about infrastructure and building stuff is what is the classic, what is the classic industry for corruption and graft and bribery, right? It's construction. The biggest scandals in the history of the world, really. I mean, the latest one globally was the Lava Jato scandal, which took down literally dozens and dozens of politicians throughout Latin America, right? It was Brazil, it was, I think, Argentina, Venezuela, obviously, is rife with corruption anyway, but it was literally all across the continent. And when you talk, when you think about periods of history in this country and, municipal projects and the mob and, where does the money go? If you want to bribe a politician, you run it through a construction project, right? You overbill for whatever materials you're buying, and somehow that project that was supposed to cost X dollars to complete ends up costing 3 and 4 and 5x, what the budget was. Way over budget, multiples over budget. Funny how that happens. So I think it's just indicative of just, the latest stage of decay of this money printing deficit spending system. And it just keeps going. It keeps accelerating. And as Preston says, it's hard to see a way out.
Well, first of all, the chat was going nuts for Preston's soliloquy there, his rant, and I love the attack helicopter memes that are going on in there. Here come Preston, guns blazing. Yeah, I mean that was
the Hellfire missiles.
I personally like the "Here Comes Corey" one. In fact, I almost bought that shirt the other day.
You got to.
And I was gonna wear it in Miami.
Here come Corey. Yeah, BTC pins. Pardis is probably watching tonight or listening later at least. But the dude who sells these pins, btcpins.com, put together a "Here Come Corey" jacket. So if you guys don't know that meme, just search "Here Come Corey" on Twitter. You'll see it. Yeah, it's good stuff. So yeah, that was fantastic. You mentioned the bond market there, right? And the bond market's just kind of been crazy this past quarter. Just crazy all over the place. Preston would love to hear a summary of, my God, there goes my lighting again. I would love to hear a summary of the bond market from you from this past quarter, because it's been insane.
Yeah, when you go back and you look at a 10-year treasury chart since 1981, you can see the trend. It's going down. It's very, very easy to see what that trend is. What I find fascinating is when you look at how fast the bond market has sold off just in this past quarter, it has moved percentage-wise faster and at a higher yield than anything we've seen in the last 40 years. For the time period, that rate of sell-off is the fastest that I can see, at least from the chart on the 10-year treasury, in 40 years. So I think COVID absolutely has a lot to do with some of that. And I think that just the expectation for inflation based on the amount of printing that's taking place and what's expected to continue to come is of unprecedented levels. And people in the bond market are obviously selling, and you're seeing the yields blow out. And what I think is also interesting is you're seeing Powell effectively say, yeah, so it is. and that's kind of interesting, because historically they've been really careful, with their forward guidance to say that they're going to be more accommodative or this and that. And they have, and let me emphasize this, with their federal funds rate and everything that's on the short duration side, they have continued to say that we're going to be accommodative on this and that. But I think a lot of market participants, especially those in equities, were hoping that they were going to kind of provide some type of forward guidance that says maybe they're going to step into the longer duration of the curve, like Operation Twist, like they did, I think it was like 5 or 6 years ago, that they went into the longer duration of the curve. So they haven't done that yet. I suspect that if the 10-year Treasury gets somewhere between 2 to 3% on the yield, I think they're going to have to step in, and they're going to have to do yield curve control, which is unlimited QE. Just whenever you hear yield curve control, just replace that or put an equal sign to unlimited QE, unlimited printing, in order to peg the yield at a certain rate. So if anybody shows up and anybody wants to sell, they will be a buyer no matter what, in order to peg the yield at whatever percent they come up with, which will probably be extremely low if they're stepping in and trying to do that, because that probably means things are starting to get really interesting in the overall markets as far as sell-offs and a run to baseline dollars.
Andy, talk to me about bonds. Let's hear something in addition to what Preston had to say there.
Yeah, I think that when the central bank tells you they're going to let things quote unquote run a little hot, I believe them basically. And as we know, stocks must go up. Bear markets are illegal, recessions are illegal, and so if yields go up significantly, or at least rapidly as they have recently, and the stock market still stays up, which it has, why would the Fed act, or do anything basically to reduce expectations about inflation? Because the bond market's telling you that it's a little spooked about inflation in the future, and yet equities go up and real estate goes up. So it seems like this Goldilocks period. I still think that the 2020s are going to be the inflationary decade like we haven't seen since 5 decades ago. And we're in this Goldilocks period where it seems like everything's going up, right? In nominal terms, as Preston pointed out, stocks are going up, real estate's going up. I mean, yeah, if yields go significantly higher, if they go 100 basis points higher or more, then yeah, the stock market could fall out of bed, and that'll be as Preston suggests, that'll be the next cue that the Fed has to step in, and they have to take the next step. They basically have to follow in the steps of Japan. Japan has been giving us a preview. They've had the biggest problem earliest, and so everything that the Bank of Japan has done, probably the Fed will do eventually. And it's just a dangerous time to own fixed income, and it's just going to be this indicator of the next step and the next step in this monetary madness, in this system in which central bankers just do the next thing, take the next move in terms of stimulus, and it just never ends.
Hey, Brady, I think it's an important point to highlight that if they mismanage this and it gets out of control and you have impairment all over the place, because when the credit that makes up a significant portion of the quote unquote money supply, the currency supply, what can happen is everyone runs to the baseline dollars. This is what happened in March of last year. Was you had a massive impairment event where derivatives were blowing up, fixed income was blowing up. People had to settle in anything that had some type of equity base to it that didn't have counterparty risk. They were offloading it, selling anything that they could in order to make good on where they did have counterparty risk in their portfolio. If for whatever reason this is mismanaged and it gets away from them faster than what they're expecting, which I think could totally play out, and is a way higher probability than what people might realize, you'll see a very similar event. And I think Bitcoin would not be spared in its short-term price action when measuring it against fiat currency. But I think for anybody who's hearing this, this is not going to be something that's going to last I mean, look how fast the March bounce was. You were back to levels that the price was at before that event within, I want to say, 45 to 60 days. So I would expect something very similar to play out if it is mismanaged from a central banker standpoint, and there's tons of impairment. And I think for people that are hearing that, they just need to remember that, so that if that plays out, they don't get emotional about it. They're just kind of sitting there and saying, hey, this was expected. My response is going to be unemotional, because nothing has fundamentally changed about how this protocol works. It's still got a fixed supply number of units that is slowly, the supply of units are slowly going up, much slower than anything else out there, which in relative terms is tightening. Mm-hmm. And those are the things that people need to remember if something like that would play out.
And just to be the usual wet blanket, this is the reminder not to use leverage, or at least if you're going to use leverage, carve out whatever small percentage of your stack that you're willing basically to vaporize, right? You're willing to watch it go up in smoke, because it will, if this kind of an event plays out. And it's also, it depends on the path as well. I mean, we could see the scenario in which we have, a savage bull market, or excuse me, a savage bear market, like we have the last few times, after the peak, wherever that comes. I'm not saying we will have one. I'm saying that if I'm asked to construct the scenario in which that happens, one of the most obvious, catalysts or set of circumstances in which you do get that big correction is actually that the bull market continues for a while. I'm talking about the bull market and everything now, equities, Bitcoin, real estate, etc. And we get into really pretty interesting prices for BTC. But then, that unwind happens. There's rates spike high enough that finally there's a reaction in risk assets. There's basically a liquidation. And at that point, we've gotten to a level of leverage in the system. And I'm talking about including in Bitcoin, where you get sort of cascading liquidations. And so you just have to be careful of that. Leverage scares the hell out of me, and I don't want people to blow it. If you're someone who's figured out Bitcoin and you've been stacking your sats for a period of years now, or even if it's only been months, because whatever you bought, you're looking at a profit right now. Please, I implore you, don't get the rug yanked out from under you, right? Don't risk your stack to get greedy, to lever up, because there's nothing worse than having the right investment thesis, having the right trade on, and then still getting it wrong, basically because it blew up on you for some short period of time.
There's a person in the comments that said, why is leverage bad if we know Bitcoin is going up? You don't know it's going up in nominal terms. We suspect that central banks are going to continue to debase the currency. And if true, it's going to continue to go up in value relative to that, because it has a fixed supply and it's going to act that way. The other thing that I would tell you, Michael Saylor is a great example. Here's a person who has taken on debt. He has leveraged that in order to buy more Bitcoin, but he's done it in a manner that he can pay off the interest that's associated with the leverage that he's borrowing against. There's a lot of people that can't say that. And so when you're doing this math and you're thinking about, like, well, let's say things do blow up. Let's say I lose my job and I can't make these payments on this interest rate, or I'm so levered that if the price action just goes in the opposite direction, because maybe there's some big macro event that nobody was anticipating, well, now you're just going to have to sell some of your Bitcoin in order to make good on the leverage that you decided to use because you were so sure that you were right. And I would just tell you, be a little less sure that you're so right, and think long and hard about how much leverage you really should be using, if any at all, and be prepared to put your big boy pants on and pay the repercussions if you're wrong. That's it.
Amen. And every Bitcoin, every Satoshi that you've got levered, probably means it's in someone else's hands, which means it's not in your own cold storage, right? Because you've given them control of that collateral. So that also, by definition, is not a great a great way to be. Again, if you want to risk, some percentage of your stack, have at it. If you want to have some sleepless nights, you want to have a little excitement, a little fun, go for it. But yeah, it's leverage. Leverage has a funny way of humbling even the smartest people, including those in Bitcoin. And I'm not going to name any names, but there's some very well-known Bitcoiners who got taken out to the woodshed last March, themselves personally. Some were running other people's money, and it was not pretty.
Yeah, I mean, that was a massive March 12th, I think you said, right? March 12th. I think we lost 50-60% in one day. It was like 9,000 down to 4,000, and that, I mean, something like that happens, and you're out of luck a little bit.
I think it's important for people to ask themselves, like, what is it that I want in life? Like, how much money is the target here? Or like, how much buying power? Let me say buying power is the target here. When you look at where we're at in this curve of Bitcoin adoption, and let's just say we're right, okay, about this thing going all the way, and you do those numbers, if you even have a small position right now, you're going to have a significant amount of buying power. Okay. So when you look at, okay, where am I going? What is the milestone that I'm trying to go to in the future here, as far as the life that I'm trying to live? And what are the objectives that I'm trying to do? If you don't kind of have a feel for what's appropriate or where you're trying to go, you're probably going to find yourself trying to do these spectacular tricks in order to have infinity. If your answer is that I want it all, just be prepared for the consequences of wanting it all. And so I think when people approach it from a more logical framework of like, what's enough? Like, what is it that I actually need for me and my family? Okay, this is what it is. And then maybe this over here is kind of for me to try to do some of those spectacular things, but it's not a whole lot. Like, people really need to take a step back and try to do something that's a little bit more responsible in order to protect them reaching that end state, because they're being afforded an opportunity that, in my humble opinion, hasn't come around for a millennia, right? Like, that's the setup here. You're being afforded an opportunity of a millennia, if we're right. And so don't squander that. Don't be greedy. Like, be smart. Think about how you're trying to actually accomplish this and go about it in a thoughtful way.
Yeah, 100%. It's this is here. Let's take a look at, if you're investing here. This is at strategy.com. MicroStrategy put this together. Now, this is Bitcoin against, here's the US dollar, for instance, right? Down 89%, 99% over 5 years. Look at Apple, 79% of the past year, 84% against Microsoft, 83% against Amazon, and it's every single stock in the S&P 500 is in the red. They're underlined in red here because they're really down. Tesla's the only one that's relatively close at negative 31% over the past year. So this is the kind of opportunity, right? This is the investment opportunity. And, with returns like that, it doesn't take, need a massive position in your portfolio in order to, massively outperform over the next 5 or 10 years, the rest of your portfolio. And, once you get to a position, deep enough down the rabbit hole and you developed enough conviction, you'll be putting a lot more than just 5-10% of your portfolio into Bitcoin, because this is an opportunity of a millennium, right? This is it. This is the big one, and we're all here for it. So you got to get some skin in the game. If you're listening, I know you're probably stacking, but you've got to get your friends and family in the game. Now is the time to get entered into this thing. It's not too late. It's not too late. That's for sure. We're still pretty early here.
So early. Yeah. Unlevered stacking, unlevered regular stacking.
Just do it. Just hold it and educate yourself and learn and teach and recruit new Bitcoiners. All right, let's get some predictions. We're going to do this again at the end of Q2. We're going to do the Bitcoin quarterly report again. Let's get some predictions from you guys about price, who's going to own Bitcoin, what companies are going to come out owning Bitcoin, any sovereign nations going to publicly announce. Just give me like one or two predictions, and we'll check in on them in 3 months.
So March is usually historically not a great month for Bitcoin, but this March was a good month. I think we've had a close already on UTC time, so I think the month is technically over. Although where I'm sitting, it's not quite over. So looking pretty good. My view was that there weren't a lot of catalysts, to really go to moon, to really go to six figures, in the month. I mean, there's been positive news. You get Norwegian billionaires showing up that weren't there before, so that's all great. And I know Preston Preston figured this out, before any of us, which is the corporates are key, and earnings season is coming, right? Q1 first quarter earnings are going to be coming out next month, and to me, that's the most obvious potential positive catalyst, for Bitcoin, because if it starts showing up on some more corporate balance sheets, or we see, the existing already announced ones continue to accumulate, I think that's just going to reinforce the bullishness that we, basically that was laid on us in the first quarter. And so that to me is like the most obvious call for next quarter in terms of what catalyzes, the next leg upward, towards six figures.
Yeah, I don't really have anything exciting to say here. Like, I think that when we look at the first quarter closeout, you see there's going to be more companies, more public companies that are buying it. I suspect, and I've been saying it for a while, I think the private companies are probably the ones that are stacking a whole lot harder because their corporate governance is typically a little bit different than the publicly traded companies. So they can go and do bolder things just because of how the voting rights are distributed inside of those types of companies. So yeah, are we going to see another tech company? I'm not quite sure. But I'm hopeful that we will. And I think if we do, it's going to be a very bullish signal for the market. As far as the price predictions kind of go, I have a model that I posted, but people should not put much weight or credit into this model. I mean, at the end of the day, all it is it's just looking at the previous cycle. It's looking at the time frame, and it's looking at the percentages that it moved in historically, and it's just kind of modeling that out. So as far as whether it follows that or not, I have no clue. I really think that a really bigger factor moving into this next quarter is whether there's going to be a policy error. When I'm looking at the major indexes all over the world, S&P 500, the indexes over in Europe, over in Japan, over in China, all of them are kind of signaling that there's kind of a momentum shift playing out right now. And it's suggesting that there needs to be more stimulus in order to keep the bull market in just the overall economy running hot. And I think central bankers are a little hesitant to provide that, especially because when you look at any type of equity price chart over the last decade, it looks like a hyperinflation chart. And so I think they're a little leery of providing that to the market. And I think we're seeing that based on some of our comments we saw with the fixed income market. So could this play out in some of the Bitcoin price charts, and when you're comparing Bitcoin's performance to fiat dollars and those types of terms? Absolutely. So I'm a little hesitant to really kind of say one way or the other. Do I think the price of Bitcoin is going to keep screaming throughout the rest of the year? Yes. Yeah. Are we gonna hit six figures? Yes. As far as the timing of it, I really can't say. I mean, everyone knows what my price chart looks like, and who knows if it's gonna keep playing out. It's been fun to kind of keep track of and to watch, but at the end of the day, I'm looking at kind of the stock to flow model as far as the higher end of where this is going to maybe play out. If we go into a super cycle, who knows? I think the whole super cycle thing is much more dependent on the things I'm going to be paying close attention to on that is like, what are central bankers doing? What is the UBI type of things and the QE things looking like as we get later into the year. I think that that's way more important of a factor. And then the other thing that I'm watching very closely is the spreads in the derivatives market, because if those spreads continue to provide these double-digit risk-free returns for market participants that are going in there and being able to capture that, that's a really, really interesting scenario that could maybe continue to add fuel to the fire as far as a supply suffocation for the amount of coins on the open market to be traded. So some of those things are what I'm going to be looking for as we get later into the year. I think the halving event alone is going to take this thing in a bull market probably clear out to like the fall time frame. I think is what I expect based on historical references to what's happened with the protocol.
Yeah, this thing is running a little hotter than it did in 2017 by this time of year.
Yeah,
and that, I think that's just a product of what we had talked about earlier. That this is just Bitcoin's a much more known commodity than it was back then at the beginning of this bull run,
which is really surprising. And if you would have told that to me last year before the halving event, I wouldn't have believed it. I would have said, "Yeah, I don't know about that." If I was a betting man, I would put it on it being a little bit slower than the previous cycle. But boy, that is not what's playing out here at all.
It's not what's playing out at all. Yeah. Well, we had the Sailor education series couple 6 weeks ago or something. And he was talking about how it takes 2, 3, 4 months to really kind of get established, go through all of the legal hoops and buy some Bitcoin for your balance sheet as a public corporation. Mike Novogratz said that he thinks there's going to be $1 trillion coming into Bitcoin in Q2. And a lot of that's going to be from these companies announcing, because it's about the right time, April, May. There will be a few months on from sort of Michael Saylor really putting this out there and coaching other CEOs on how to do this. So I think that we could see, a lot of corporations, dozens, if not more, corporations in the S&P 500 come out and say that they're holding some Bitcoin. Go ahead.
Yeah, I'm seeing in the comments people talking about life insurance, and I think that that's a really interesting discussion point, mostly because when you look at what are they experts in at insurance companies, they're experts in probabilities, and they're looking at and they've got to manage a float. Right. So they're taking deposits, they're holding that for the eventual payout based on the statistics that they've calculated for certain events. And historically, a lot of these insurance companies are heavy in fixed income. It's been one heck of a trade for 40 years, like we've said numerous times when we've talked in the past. You buy fixed income, interest rates keep going down for 40 years. You make a lot of money on those positions, and you don't have a lot of volatility to go with it. So when we look at insurance companies slowly starting to get into Bitcoin, what that's telling me is they're hedging, and they're looking at it from a statistical standpoint and saying, hey, if we're wrong about this, or that the currency is in the situation that it's going to start being used as a store of value relative to all these other things, and we don't have some type of exposure, call it 1% or 3% or whatever they're calculating that risk to be, it's really quite fascinating to see how they're entering. And there's some of the early entrants relative to other types of companies. And I think they totally get this because they're looking at it from, how much risk that they can attribute to something from a probabilistic standpoint. And they got a lot of money to play around with. So I like that discussion point, and I think it's going to be interesting to see how they close out their first quarter when you look at some of these big insurance companies, whether they're putting it on their balance sheet.
Yeah, Mass Mutual this quarter, 169-year-old insurance company. Put a big chunk on.
Just to underscore that point, and one prior, Ross Stevens, who runs NYDIG, or he runs Stone Ridge, which owns NYDIG, went on record talking about how he knows of life insurance companies that haven't announced, but that have, started to put positions on or have put in orders, directly through NYDIG or otherwise. And then getting to the path of this bull market, I agree that, we still probably have quite a few months of upside here. I think I saw Bitcoin Teen in the chat earlier, and he's not going to like this comment, but one of the indicators I look at is the price versus the 200-day moving average, also known as, of course, as the Mimble multiple. You guys know that one. Thanks to our friend American Hodl, who did his research on that one. I look at that indicator, and as as people know, when it gets overheated, when it gets over about 2.5, usually you get a correction, and that happened in January, and that happened in February, and in the last couple of real exciting bull market blow off tops like we had in the prior two halvings or the prior two cycles. Usually in the blow off stage, the last stage of the bull, it gets to really insane levels, right? It basically goes parabolic. And although we are ahead of schedule, as you guys both mentioned, the bull market has been sort of behaving properly. It gets kind of out of whack on the advance. The advance gets too rapid, and then it corrects, and you have a consolidation period. And so I think there's a pretty good chance that we see that blow off stage at some point. We haven't seen that yet.
Yeah, not even close.
This is base camp 2. We're not even close to the top yet. There's a few more base camps to go. The Mimble multiple, pretty good. There's people on the chat are loving that one. That's a good inside Bitcoiner joke. If you don't know about it, you can go ask on Twitter and get that story. It's a good one. And I was gonna say Ross Stevens, right, at NYDIG, also said that he revealed that sovereign wealth funds have been inquiring about getting into Bitcoin at NYDIG. So there is no type of entity, large or small, that has not inquired about buying Bitcoin in some official capacity at this point, and that's incredibly bullish. So amazing quarter, guys. Thanks for being here to talk about Q1 for Bitcoin in 2021. We'll do it again here in a few months and just see where things are. It's going to be wild. Looking forward. We've got Bitcoin 2021 in Miami early June. So that's going to be toward the end of Q2. And, it's going to be a wild time. If you are, able to join us in Miami, go to, I think it's, I actually don't know, b.tc. We'll get you there. That's the Bitcoin magazine, BTC Media website.
What are you guys going to have there, Brady?
Yeah.
Are you guys going to have your own booth, or what's going on?
Oh man, we don't have a booth. We have a dome.
We have
a Swan Lounge. We have a dome. Yes. We'll be outside. There's a 360 bar at the venue outside. And there are a few sponsored domes. They're air conditioned, nice proper setup. It's going to be like custom printed on the outside. We're calling it the Swan Lounge. We're going to do live broadcasts from in there pretty much all day long. We're going to bring in some of your favorite podcasters and content creators to do some shows from inside the Swan Lounge. Of course, I'll be there. Other team members of the Swan team will be there. VIP guests coming in, hanging out. It's gonna be a blast, man. We're super excited about it, and of course all of the events that satellite events that go on around it. It's 2019 was the last Bitcoin conference. 2020 of course got canceled, but that conference launched my career really. The connections I made there, networking, were made Citizen Bitcoin podcast what it was, and that's what got me on the radar with Corey and into Swan and everything. So this is a growing industry. Obviously the Bitcoin industry is and Bitcoin only in particular is even growing leaps and bounds this year. So if you're a Bitcoiner tried and true and you're looking for a Bitcoin only job over the next year or so, that's the dream, right? Get down to Bitcoin 2021 and meet everyone you need to know.
Andy, are you seeing these comments?
It's reminding me of the toxic happy hour chat.
I don't know how you're keeping a straight face. I'm over here dying.
I love it. I love the heat these guys are bringing.
So how many days is it, Brady? I'm just curious that you guys are going to be set up there, because I'm definitely coming by for some free drinks. How many days are you guys having this set up?
Well, you're gonna have to buy your drinks.
You're
gonna have to buy your drinks at the bar.
You guys,
well, I don't know. Maybe there'll be some free ones.
Come on, man.
I don't think we can. We would like to probably, but I don't think we can. But there's a bar there.
Did you get a liquor license for this? Like, how does that work?
I don't know. I will ask. I'll ask the guys. Maybe now that we have this dome, we can do whatever we want. Who knows? We got to come by. We'll figure it out, Preston. All right. But yeah, it's going to be a ton of fun. We're talking to all kinds of like different things, like the Bitcoin Minstrel on Twitter, who does the sea shanties that are amazing, the Bitcoin sea shanty songs.
Those. Yep.
We're gonna organize a big sing along. We're gonna put up the lyrics up on a screen, and we're gonna sit outside the bar and just sing out a sea shanty like Irish salty sailor style. It's gonna be great.
How many other vendors are gonna be there? I'm just like curious how big Swan's footprint's gonna be. Because it all comes down to like the size of your like setup. And, like...
Yeah, well, there's going to be several other domes. I think there's like 3 domes, so we're one of 3. There's going to be maybe 100 vendors or whatever inside. There's an exhibition hall, so there'll be a bunch of booths. I don't know, maybe it's 50. I don't know. There's probably about 50 at 2019. So I'm sure it's going to be bigger than that. And they said this is going to be 5 times bigger in terms of attendance.
Wow.
So this is going to be huge, and they have a big space. It's looking really cool. So I'm stoked about it. But yeah, Swan,
are you going?
He's got a big spot.
I got my ticket, dude.
I'm going.
I don't have my hotel booked yet, but I got my ticket.
You don't have a hotel yet?
Got I got a million like Starwood points or whatever that I gotta figure something out there. Although I'm told well, I don't know. You were telling me you had some tentative plans, but
yeah. Did you hear what happened? Did you hear what happened to me? So I was on Twitter and I said, hey, where's everyone staying? Like, where's the spot to stay? And Hodl reached out and he says, hey, I got this awesome place. He posted the picture of it. It was this sweet pad. It had like this awesome pool. I guess there's like a basketball court, whatever. And I was like, hey, are you serious? Can I stay there? And he was like, yeah, absolutely, man. So I think I was talking to him on Clubhouse like 2 days ago. And I was like, hey, man, am I still good for the house? And he goes, nah, man, I'm sorry. it's full. I was like, are you serious? He's like, yeah, man. There's other people that are staying there now. Like, you didn't say anything else. I was like, all right, man, I guess I'm going to book a hotel now. Thanks a lot.
Dude, I saw you tweet, I'm in. I don't know what else you need to do. I don't know what else you need to do.
I'm going to sell that tweet.
NFT
God,
that.
What a joke.
Hodl needs to explain his booking policies right now. Get him on. Dial him up.
He does. He left me high and dry, man. Just
That's
straight
brutal.
up. Yeah.
The other consideration is, if we're at 100K by then and Sailors, that's Sailors home base in Miami, right? I mean, that could be we may have to figure out how to stay an extra day or two if that party comes together right then and there.
Danish just offered me to stay at his suite. Man, that sounds scary. I would never stay with you, Danish, ever.
Savage.
Dang, Anders.
I love you. I love you.
Burned by Preston on YouTube. There you go.
Well, people are talking about my daughter.
No.
Just stay away from my daughter.
Yeah. Not cool, guys. Not cool.
Come on.
All right.
Another Hodl disaster.
Good stuff, guys. It's going to be so much fun. Get down to Bitcoin 2021. It's going to be insane. And you know what? We all deserve it. We all deserve it after going through this year. And it's going to be good to see some friends and not just have to be on Twitter and through Zoom and live broadcasts like this. So I'm looking forward to seeing you guys.
Likewise, it's going to be a hell of a time. And speaking of daughters, thanks for the shout out, Fred Hodl. I won't be bringing mine to Bitcoin 2021, but yeah, watch out. It's going to be a great time.
Can't wait to join you guys and finally meet you in person. We're like these weird internet trolls and weirdos that just talk on the internet, but it's going to be nice to meet you guys in person. So I'm looking forward to it.
Likewise, guys. All right. The chat likes this. We're going to have to, maybe make this a regular segment. We just do like the Bitcoin hangout every like 30 minutes after Swan Signal Live. That's what Swan Lounge is really for, though. So everyone watching, come and hang out on Swan Lounge with us. We'll get Preston over there someday, and we'll we'll see what you guys got in the comments. You can bring your best. All right, gents. It's time to get back to the fam. Thanks so much for joining tonight, and we'll see you at on the Twitters and down at the conference.
See you there.
Thanks, guys, and thanks to all the viewers and listeners. You guys make this so much fun. Have a good one.
All right. Well, that's it, guys. Like I always say, Preston, Andy, you guys are welcome to take off. I'm going to talk for just a minute here. I like to tell you all about what's going on here when at the end of these things, and I'm always bullish. Talking to incredible Bitcoiners like Preston and Andy, and they just get me fired up. And it's an incredible time to be alive, and in particular to be here watching this stream. If you're here watching this right now, you're what you're in for, right? Or if you're relatively new, maybe you don't. This thing is the most amazing opportunity, as Preston said earlier, in 1,000 years. We are reinventing money. And I like to say that money is the base layer of civilization. It's what really allows us to, improve over time, right? We have language as like the base technology that's really built civilization, and money is a special type of language, right? It's probably the most important. It's a global language. It communicates our needs and wants across space and across time, and we can then understand those needs and wants and provide solutions for them. And we start building those solutions up over time, and we end up with where we are now, which is incredible point in human history, not just with Bitcoin, but in general technology. The time we're living in now is this exponential technology built on top of other exponential technologies, and we're at this asymptote, right, of this exponential advancement in humanity. And I think Bitcoin is what will allow that exponential advancement, this technology, to really kind of bring everything together and really allow us to do this in a coherent and fair way to progress into this future. We're really at a tipping point. And so we really desperately need this technology, and we need it to establish itself in a fair way, in the best way it possibly can. And that comes through and happens through education, right? And it is incumbent upon us as Bitcoiners to go out there and talk to our friends and family about this thing so that they understand what's going on. There's so much misinformation out there, so much scamming going on, and that kind of confusion will hurt a lot of people. So, if you guys can find 5 or 10 Bitcoiners who you can bring into the fold and really help them understand really what's going on here, you will be doing your part as a Bitcoiner to really establish this thing sooner than later, and in the best way possible, so that we can build that brighter future. Thank you for being here, and we at Swan really appreciate you joining us on the Swan Squad. Thank you for just being here as a Bitcoiner. It's an amazing time to be alive. So I'll see you next, actually in 2 weeks for Swan Signal Live. We're going to be doing these every other week now. We got too much going on at Swan. It's just too much work to do. So we're going to do these every other week, and we'll keep bringing the heat. We'll keep bringing the great guests and the great discussions. Glad you all had a good time tonight. A lot of fun watching in the chat.